Here are the steps you need to follow. Step number one, you got to know where to get a startup business line of credit with low documentation, no personal guarantee, and giant approval. Because the thing is that, we love banks and credit unions, don't get me wrong. But when it comes to startup business line of credits, especially with low documentation and no personal guarantee, banks and credit unions are not the best lenders for you. They may have the most competitive rates and terms, but you're not going to qualify because their terms are very strict. Okay, so what you want to do here is you have to look at two other categories of lenders, business lenders for that matter. You have online lenders, and then you have alternative lenders. So when we talk about online lenders, we're speaking about the likes of Fundbox, Bluevine, Cabbage from American Express, and On Deck. So those lenders, they will actually work with you even if you have less than, let's say, 1 year of operational history. They're fine with that because they're comfortable dealing with those types of businesses. So besides online lenders, you also have alternative lenders. So here you have Kalamata Group, you have SmartBase, you have Lendio, which is a marketplace, but a marketplace that actually has a constellation of, let's say, 75 plus lenders. So you have Biz to Credit. So you have a lot of players in the alternative lending space. So those lenders, they're more comfortable giving you a startup business line of credit with low documentation, no personal guarantee, and a giant approval. There's one exception. I need to qualify what I just said about banks and credit unions. You can get a startup business line of credit with low documentation, no personal guarantee at a bank or credit union if you have a strong relationship with the institution. In other words, you have a strong relationship with them at the personal level. And I'm not talking about just having a good relationship over 12 months or 24 months. No, this is a multi-year affair. Like, they have to actually know you. The bank has to know that you are good. You have a great FICO score. You have dealt with the bank for many, many years. You have borrowed from them and repaid with no problem. So they're comfortable working with you at the personal level. So you can parlay that great relationship at the personal level into a business relationship. Step number two. So step number one, you need to know where to get the startup business line of credit with the low documentation and no personal guarantee. Step number two, you got to have key questions. You got to keep key questions in your mind. Those are really important questions. By the way, welcome back to the show. Really appreciate having you here. Obviously, we're having a conversation about startup business line of credit with low documentation, no personal guarantee. In other words, your personal assets are not seized if something happens with the business line of credit if you're not paying. So there are a few questions you got to keep in mind. So, can a startup business get a line of credit with low documentation and no personal guarantee? Yes. You don't have to be in business for 12 months. On YouTube, people telling you, hey, listen, you got to be in business for 12 months minimum to qualify for a startup business line of credit. That's not true. This is not true. We have evidence. We have business clients, including startups, for which we apply successfully for business lines of credit. So it's totally possible. You can have a brand new company, but it's all about how you package the application. See, there are two elements when it comes to the application package. You have your business plan. You have to write a compelling business plan for the startup. And the second element is you have to have all the paperwork that proves that the startup is legit. Things like articles of incorporation or organization, certificate of, the bylaws. You have business licenses and permits. Okay, you have a constellation of elements that make your startup business line of credit application legit. And can you get a business line of credit with no revenue? Yes, you can. Definitely can. If you have a strong piece of projected data. So when we talk about the business plan, obviously you have the qualitative aspect of things, right? So where you analyze the industries, you analyze the competitors and whatnot. But you got to also have the quantitative aspect of things where you actually talk about your projected financial data. And again, When we talk about projected data, I'm not asking you to actually make up numbers. Don't you try to razzle dazzle the lenders with numbers you cannot actually justify. So, for example, if your competitors are banking on, let's say, 5% growth this year, don't you write down in your business plan that you are going to grow 25% or 30%. That's a lie, and you don't want that. And so you can get a line of credit even if you're a no business. Yes, this is totally possible. And you can even get an unsecured business line of credit. This is where the no PG factor comes into play, right? The no personal guarantee. So there is no collateral pledged. There is no collateral at the business level or at the personal level that's pledged at all. The third thing I want you to really be clear about it, you got to know the pros and cons of a startup business line of credit. You know why? Because if you know the pros and cons, you might be thinking, well, I don't really think I need a business line of credit for my startup. Maybe I need invoice factoring. Maybe I need equipment financing. Maybe I need a merchant cash advance. Maybe I need a regular installment loan for my startup. This is why it's really important that you want to. So I'm going to quickly go through the pros and cons so you see what really works for you. But by the way, I just want to quickly remind everybody that we are having a conversation about startup business line of credit with low documentation, no personal guarantee, and giant approval, how to always make it happen real fast. So what are the pros of a startup business line of credit with low documentation? Well, this is a flexible form of financing, right? In other words, you can use a line of credit for a range of short-term purposes, including managing cash flow, covering emergencies, or taking advantage of unexpected opportunities. So when you think about it, flexibility makes this financing solution well suited for the fact that your startup business is really unpredictable. The fact that everything is new. I mean, you've been in business for 3 months, 6 months, so you haven't really gotten in a position where things are predictable. Okay. Another another advantage of a startup business line of credit with low documentation and no personal guarantee is that you have access to fast cash. Okay, you can draw funds from your credit line. You can have access to cash quickly. And the thing is, whenever you need the cash, and you only pay interest on the funds you draw. Because if you think about it, a business line of credit is kind of similar to a business credit card. The only difference is for a business credit card, you don't have access to real cash. I mean, you can pay, you can charge your card, you can charge things on your card, but you don't actually withdraw cash. But the business line of credit gives you access to real cash. Okay. And the third advantage of a business line of credit is that you are able to build business credit. This is important. But here, if you want to build business credit properly, make sure that you keep your credit utilization ratio at or below 30%. Okay, so your CUR, your credit utilization ratio, should be at or below 30%. Very important. So those were the pros of a startup business line of credit with low documentation. Let me kind of familiarize you now with the cons, because actually there's nothing perfect. I mean, you have things that you have one thing, and then you have the flip side of the coin. You have less interesting elements. So a business line of credit, boss, the thing is, this kind of financing can be very expensive, because APR on some startup business lines of credit can run high, because the thing is, the lender is accounting for the fact that your startup might actually default. Okay, newer businesses generally pose a greater risk to lenders compared to more established businesses. I mean, this is just pure logic, right? You can't fight that. You can't deny it. So to qualify for the best possible rates, you want to show a solid business plan, but also compelling financials. And you might have a second disadvantage of a startup business line of credit is that you might have limited options, because not all lenders offer startup business lines of credit with no PG, with low documentation. So there can be limitations for the ones that do. And the ones that do, I just listed them earlier. I was talking about Blue Vine, Cabbage from American Express. I was speaking about So I was actually I was talking about blue vine on deck, okay, cabbage, and fun box. So you have a smorgasbord of small business line of credit options, but it's really important to understand that the options are still limited, simply because the bigger players are not in the field. You don't have the big banks. You don't even have the smaller banks, for that matter. You don't have the credit unions, okay? And also, in some cases, a third disadvantage of a startup business line of credit is that you might have personal financial risk. So even if you can qualify for a startup business line of credit, it's important to make sure you can afford to take on potential debt. Because the thing is that, if you have a startup, the cash flow might be sporadic, if at all. So you got to find a way to actually manage your cash flow, your cash inflow, so you are sure that you can repay whatever you charge on the card. Well, I mean, not on the card, whatever you charge on the line of credit, whatever credit limit you tap into the line of credit. Let me just quickly talk to you about how to apply for a startup business line of credit with low documentation, no PG. By the way, I just want to quickly remind you of today's topic. We're having a conversation about startup business line of credit, low doc, no PG in general, how to make the whole thing happen fast, especially if you're looking for a large amount, a large approval. So the thing is, generally, you can apply for a startup business line of credit from an online lender or an alternative lender, right? I just made that clear that banks and credit unions are out of this game, because for them it's just too risky. What you want to do here is that you want to actually contact the lenders. Now, some lenders will tell you, hey, listen, you can apply for everything online. You don't have to call us. You don't have to do anything. Just follow the prompts online, and we'll just connect with you afterwards. So if that's the case, then go ahead and do it. Don't call the lender. You first want to apply. You want to show interest. You want to provide documentation. And then they will actually take the time to talk to you. But the thing is, if you just call them out of the blue and just say, listen, I'm considering, they might actually be polite with you. But the thing is, it works a lot better if they've seen some commitment from you. And this means that you have actually gone through their websites. You have filled out the paperwork. That this is important. So when it comes to the application, you can apply over the phone also. In other words, you call the lender and you actually provide all the, you go through the survey, you answer the questions that the loan rep has for you. And then you can also apply via email. In other words, you can actually upload your paperwork via email. But what we have seen in our research is that a lot of those players, a lot of those lenders, they want you to apply online on their websites. So they will have a form, a contact form that you have to fill, and once you fill that, you are good to go. Okay, so they will ask you for things like credit score, time in business, annual revenue. Okay, they might ask you to upload documents such as business registration documents, business plan, business bank statements, or personal bank statements also, personal and business tax returns. If you are a brand new startup, you don't have a tax return yet, okay? But if you have been in business for 9 months, for example, and based on the time of the year you started your business, then you might have some potential liability in terms of taxes. Then that will be really interesting to see also. But one thing I want to say here is that don't forget that you also need to have your financial statements. And those financial statements, as I said it before, they must be factual. They can be projected, but they need to be realistic. Not factual. They need to be realistic. Very quintessential. And let me just talk to you about other startup financing options. The thing is, ideally, you want to have a startup business line of credit with low documentation, no PG. But sometimes, listen, boss, you can ask for one thing and they give you something else. And the thing is, are you going to say no? You need the money because you have all of those tests that are waiting to get started in the office. You are looking to hire maybe an extra pair of hands to kind of help you out, or you need to expand your inventory, to expand whatever it is, you need the money. So, but if you can't get a startup business line of credit, then you got to be creative here. It's all about being creative. But the thing is, you want to start always with what kind of options are available to you. There are actually three financing options besides a startup business line of credit. You can have a startup business credit cards. Okay, I mean, if you are lucky enough to actually get a business credit card from a bank, not a secured one, an unsecured one, because the whole thing is you are trying to actually build business credit also. Okay, and so you can have a startup business credit cards. You can have personal business loans. Now, some loans actually can help you expand your sole proprietorship. Actually, they are meant to apply to sole proprietorships. So if that's your case, then this is just fantastic. This is wonderful. So you want to consider that also, but this will only work if your personal finances are in good shape. If they are, then you may be able to take out a personal loan to help fund your business. Okay. And one thing I want to say here is that you have to also think about maybe your friends, family members, or maybe crowdfunding. I mean, if you don't want to take on debt from a financial institution, consider turning actually to your personal network for investments instead of this could be, for example, you can ask friends and family for funding directly or through a crowdfunding campaign. So whatever you do, just make sure that you are able to document the whole process. You are able to make expectations clear from the get-go, and you want to follow through. This is really, really important. And if you are trying to get a startup business line of credit with low documentation, no personal guarantee, it's important to find the right business line of credit. Because the thing is, your business, boss, is unique. I have no idea the kind of industry you're in, but your business is unique. Your business is different from, hypothetically, my business. It is different from your next door's business. So it's really important to actually find the right business line of credit that will fit into your business, into your operation. Okay, this is really important, and you got to think about a lot of factors that kind of help you what the business loan is suitable to you. For example, think about the time to fund. Think about the business's qualifications. Think about the revenue amount. Those are criteria that actually will eliminate a lot of folks. And you want to be very clear about that. So, big decision time, boss. What is the right business loan or the right business line of credit for your startup? Have you thought about it? And to answer that question, an ancillary question is, what do you need the money for? Do you need the money? Do you need the lender to give you the money like in your hands, or are you comfortable if they just pay off a third party? This is really important for you to really understand, because this will determine whether or not you really need cash or not. And here is the approach you need to follow. Make sure, write down on a piece of paper how much you need. Then you want to ask yourself, what type of loan do I need for this amount? Can I get it through a regular loan, or can I get it through an invoice factoring arrangement? Can I get it through an invoice financing arrangement? Can I get it through? So whatever it is, you got to really figure out whatever can allow you to actually get what you want to get. Okay, so this is really important. And one thing I want to say before closing today's conversation is that, listen, if everything doesn't work, you can always go back to your bank. Even if you don't have the best relationships with them, you can always go back to your best, to your parents. And it's important also to understand that the bottom line, if you want to go back to, let's say, to your family, to your friends, to your parents, to your entourage for more financing, you can do so. The bottom line is just make sure that you document everything. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about startup business line of credit, low documentation, no personal guarantee. And I spoke to you about where to get a startup business line of credit. Key questions to keep in mind: the pros and cons of a startup business line of credit with low documentation, no PG, how to apply for such a business line of credit, other startup financing options, and how to find the right business loan. Thank you so much for your attention. I really appreciate it. I'll speak to you another time, but until then, remember, stay marvelous.